Welcome to This Explainer. Today, we're going to connect the massive, high-flying profits of global tech investments to some incredibly surprising regional realities. We're going to literally map out exactly how capital is moving right now and how geopolitical and domestic friction points are colliding with these enormous financial shifts. So, let's jump right in.
Okay, here's our roadmap for today. We'll cover point 1, Norway's record-breaking wealth. Then point 2, the global AI tech boom. 3, Tencent's AI spending struggles. 4, what's next for tech? And finally, point 5, Nordic security and scandals.
Section 1, Norway's record-breaking wealth.
Get this, Norway's national savings just pulled off the absolute best 6 months in their entire history. Their sovereign wealth fund posted its largest half-year profit ever recorded. We are talking about a massive 1.75 trillion kroner. To put that into perspective, that translates to $184 billion. And the truly wild part? Every single krone of this staggering profit belongs entirely to the state.
Now, you might be wondering, where is all this cash actually coming from? Well, roughly 40% of the Norges Bank Investment Fund is driven directly by key U.S. tech equities. The massive gains they're seeing are heavily tied to household names. We're talking NVIDIA, Microsoft, Tesla, and Apple. It's a really powerful illustration of just how heavily reliant global state wealth has become on the American tech sector.
But they aren't just sticking to public markets. Buried right there in their recent holdings list was the disclosure of something totally new. A brand new, massive stake in Elon Musk's SpaceX, valued at $1.2 billion. They are aggressively positioning themselves in the next frontier of tech and aerospace infrastructure, for sure.
Section 2, the global AI tech boom.
So this AI boom, it is absolutely not just an American story. It is a global phenomenon. Memory companies had a particularly strong run, with Asian tech stocks seeing a 9.4% return in just the first 6 months of the year. Singapore's sovereign wealth fund, Temasek, helped fuel some of these massive gains by zeroing in on Asian memory companies, heavily backing major players like Samsung and SK Hynix. And seeing this institutional support for companies like CXMT and Kioxia really validates the sheer global scale of this AI boom.
And to back up this boom even further, we're seeing strong validation of the tech trade through solid earnings from companies like Lumentum and Supermicro. Now, these companies represent very different but completely vital layers of the global AI infrastructure build-out. Because they sit squarely within NVIDIA's broader ecosystem, their strong performance is a massive signal. It tells us that after a somewhat tough July, the chips are rallying again and this global infrastructure build-out is aggressively pressing forward.
Section 3. Tencent's AI spending struggles.
Now, here's where it gets really interesting, because it's not all smooth sailing. Look at this sharp contrast with the Chinese tech giant Tencent. They had a fantastic revenue beat for Q2, bringing in $30.4 billion, which is an 11% jump year over year. And that was heavily driven by a 17% spike in gaming, plus growth in AI-driven advertising. But here's the catch. Their profits completely missed expectations. Why? Because their capital expenditures came in significantly higher, driven almost entirely by the sheer, massive costs required to actually build out that AI capability.
And the market reacted exactly how you'd expect. Because of those heavy AI capital expenditures dragging down their profitability, Tencent's stock plummeted nearly 30% in Hong Kong. This is an absolutely crucial metric for us to understand. It shows the very real, very immediate cost of this tech race. Building AI infrastructure requires staggering amounts of upfront capital, and right now, investors are severely punishing companies whose profit margins shrink under that tremendous weight.
Section 4. What's next for tech?
Okay, so with that expensive reality check in mind, what are we watching next? We actually have a heavy slate of earnings on tap, and investors are laser-focused on a few specific names. First up, Applied Materials. We're looking at them to gauge continuing AI demand trends, since they're a massive beneficiary of this boom. For Lenovo, the market really wants to see continued outperformance in their server business. And finally, JD. Much like that Tencent situation we just talked about, profit margin recovery is the huge focus there right now, especially amid heavy AI investments and some really fierce local competition over in China.
But beyond just the individual tech earnings, we're also keeping a close eye on the broader macroeconomic picture, specifically the Producer Price Index. This is going to be key for seeing if we're experiencing any kind of easing at the wholesale cost level. And that's especially important given the ongoing tensions and disruptions we are currently seeing in the Middle East. Ultimately, all of this trickles down to impact these high-flying global investments.
Section 5. Nordic Security and Scandals.
Finally, let's zoom back out to the Nordics, because while the region is managing massive wealth, they're also dealing with some incredibly stark real-world issues on their home turf. Follow this timeline with me. It shows just how quickly global geopolitical tensions can manifest locally. On August 6th, security guards on the Swedish coast found a Russian couple camped a mere 50 meters from a cottage linked to the chief executive of Saab. They were immediately detained by Swedish authorities and actually held for nearly a week.
Now, you might be asking, why was this treated with such extreme suspicion? Well, that proximity was deeply alarming, specifically because Saab is the company currently manufacturing the Gripen fighter jets that Ukraine has explicitly agreed to buy. So in the context of the ongoing conflict, having foreign nationals camped outside the CEO's cottage, yeah, that instantly raised massive red flags for national security.
But here's how it actually played out. It perfectly illustrates the legal boundaries being tested in the region during these times of heightened anxiety. Despite the obviously alarming context of the Saab CEO and the fighter jets, a Swedish court ultimately mandated the couple's release. And their precise reasoning? They ruled that simply speaking Russian is not a reason to detain anybody. It's just a fascinating look at how judicial systems are trying to balance deep national security fears against individual rights.
Meanwhile, right next door in Norway, the very same country managing that $148 billion half-year profit we started with, a severe domestic scandal has rocked the royal family. The crown princess's son, 29-year-old Marius Borg-Høiby, was sentenced to 4 years in prison for rape this past June. An appeals court flat out refused to let him go free. So, until September 7th, he is literally confined with an electronic tag inside Skogum, which is the official royal estate where his mother and the crown prince live while he appeals that conviction.
So as we wrap up this explainer today, here is the big question I want to leave you with. We've seen just how profoundly connected our financial systems are, from Singapore injecting capital into Asian tech, all the way to Norway buying into American AI and SpaceX. But we've also seen how the sheer crushing infrastructure costs of AI can tank a stock, and how regional security threats and intense domestic scandals are playing out right in the backyards of the world's biggest investors. So how will the friction between these high-flying global investments and these very localized real-world tensions shape our financial future? It is absolutely something we all need to be watching closely. Thanks so much for joining me, and I encourage you to keep questioning how these massive global forces continue to intersect with local realities.